Looking to build a steady stream of income while growing your wealth? Dividend stocks are a powerful way to do just that. In this quick guide, I'll share the top 5 dividend stocks to buy and hold in 2025. Companies with strong track records, reliable payouts, and solid growth potential. Whether you're a seasoned investor or just starting out, these picks can help you create a resilient portfolio that pays you back year after year. Let's dive into the best dividend opportunities for the year ahead. Today we will talk about top 5 dividend stocks to buy and hold in 2025. So before we start, make sure to hit the like button and subscribe to my channel. 1. Johnson & Johnson, J&J. The healthcare dividend powerhouse, Johnson & Johnson, J&J, is one of the most trusted names in healthcare and has long been regarded as a blue-chip dividend stock. With a diversified portfolio that includes pharmaceuticals, medical devices, and consumer health products, J&J is well-positioned to weather economic fluctuations. Its products, ranging from over-the-counter medicines to advanced cancer treatments, create multiple revenue streams, reducing risk and enhancing stability. J&J's most impressive feature is its dividend consistency. The company has increased its dividend for more than 60 consecutive years, a testament to its strong earnings and cash flow generation. This makes it a dividend king, a coveted status held by very few companies. The current dividend yield of about 2.7% provides steady income, while the company's dividend growth rate has historically averaged around 6 to 7% annually. Financially, Johnson & Johnson's robust free cash flow supports its ability to fund dividends, research and development, R&D, and acquisitions simultaneously. The company invests heavily in innovative drug pipelines, especially in immunology, oncology, and cardiovascular disease, areas expected to drive growth in coming years. Despite the uncertainty in healthcare regulation and pricing pressures, J&J's diversified business model and strong patent portfolio provide a solid cushion. Moreover, J&J's conservative payout ratio, typically around 50%, leaves ample room for dividend increases, even during economic downturns. The balance sheet is strong, with a manageable debt load and sufficient liquidity, which are critical for sustaining dividends over the long haul. For investors seeking dependable income combined with modest capital growth, Johnson & Johnson is a prime candidate to hold in 2025. 2. Procter & Gamble PG. Consumer staples with unmatched dividend resilience, Procter & Gamble PG is a titan in the consumer staples sector, producing household essentials such as Tide detergent, Gillette razors, and Pampers diapers. These products maintain demand through economic ups and downs because they fulfill everyday needs. This stability allows PG to generate predictable cash flow, which supports its impressive dividend history. As a dividend king, Procter & Gamble has raised its dividend for more than 65 years consecutively. Its current dividend yield stands around 2.3%, appealing to income investors seeking safety and reliability. What sets PG apart is its ability to continually innovate and adapt to consumer preferences, especially by expanding into premium and sustainable product lines. This has helped the company maintain pricing power despite inflationary pressures. P&G's business model benefits from scale advantages and global brand recognition, ensuring it remains competitive worldwide. The company invests strategically in digital marketing and e-commerce, channels that are increasingly vital to reach consumers. This proactive approach enhances long-term growth prospects. Financial discipline is another hallmark of PG's dividend policy. The payout ratio is generally maintained at a conservative level, around 60%, balancing dividends with capital reinvestment and debt reduction. Even amid challenges such as raw material price volatility and global supply chain disruptions, PG has continued to increase dividends. For dividend-focused investors seeking a mix of income stability and modest growth potential, Procter & Gamble remains an excellent stock to buy and hold in 2025. 3. Chevron Corporation CVX, energy dividend with strong yield and growth potential. Chevron CVX is one of the world's largest integrated energy companies, involved in oil exploration, refining, and marketing. Despite growing environmental concerns and the global shift towards renewable energy, oil and gas continue to be essential energy sources, supporting Chevron's long-term cash flow stability. Chevron boasts a high dividend yield, typically between 4% and 5%, making it especially attractive in an environment where safe yields are scarce. The company has a history of over 30 consecutive years of dividend increases, illustrating resilience through volatile commodity cycles. Chevron's strong balance sheet and disciplined capital spending ensure dividends remain well covered by operating cash flow, even when oil prices dip. The company's focus on cost efficiency and technological innovation helps maintain profitability. In addition, Chevron has been gradually investing in lower carbon energy solutions, such as carbon capture and biofuels, to diversify its portfolio and prepare for the energy transition. Commodity price fluctuations can create short-term risks for Chevron, but its long-term fundamentals and shareholder-friendly policies make it a solid choice for dividend investors, comfortable with some cyclicality. The combination of a high yield and the potential for capital appreciation amid rising energy demand positions Chevron as a top dividend stock to hold in 2025. 4. Realty Income Corporation, O. The monthly dividend company in real estate. Realty Income Corporation, O. is one of the most well-known REITs, famous for its monthly dividend payments and reliable income stream. Specializing in commercial real estate, Realty Income owns and manages a broad portfolio of retail, industrial, and office properties leased to creditworthy tenants, including national chains and essential service providers. As a REIT, Realty Income is required to distribute at least 90% of its taxable income as dividends, resulting in a high dividend yield, currently around 4.5%. The company's consistent dividend increases for more than 25 years have earned it the nickname the monthly dividend company, appealing to investors who want steady, predictable cash flow throughout the year. Realty Income's diversified property base and long-term lease agreements provide rental income stability, which is crucial for dividend sustainability. It maintains a conservative payout ratio and prudent debt management, reducing risk related to interest rate fluctuations or economic downturns. Although REITs are sensitive to interest rates, Realty Income's strong fundamentals and high-quality tenants mitigate some of these risks. 5. Microsoft Corporation, MSFT, tech giant with growing dividends. Microsoft, MSFT, has evolved from a pure growth stock to one that also appeals to dividend investors. Thanks to its dominant position in cloud computing, enterprise software, and subscription services, Microsoft generates vast amounts of cash flow, enabling consistent dividend growth alongside robust capital reinvestment. Since initiating dividends in 2003, Microsoft has increased payouts annually for nearly 2 decades. Its current dividend yield is modest, around 1%, but the dividend growth rate is impressive, often exceeding 10% annually. This combination of moderate yield and rapid growth attracts investors who want both income and capital appreciation. Microsoft's key growth drivers include Azure Cloud Services, Office 365 subscriptions, and LinkedIn advertising revenues. Its wide economic moat, fueled by ecosystem integration and strong customer loyalty, supports sustainable earnings growth. The company's strong balance sheet, with minimal debt and large cash reserves, provides flexibility to continue increasing dividends and repurchasing shares. But if you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.